Everyone. My name is Artie Mason. I am the Senior Manager of the broker team here at Heartland, and I welcome you to our webinar today. We will be discussing all things vulnerable customers and how to look out for vulnerability and what to do once it's been identified. It's really important to note that vulnerability does not mean that anything is wrong in reference to their situation or taking out a loan, but it's all about that extra care and ensuring the loan is not unsuitable and providing the best customer outcomes. Presenting our webinar today is our BDM, Emma Byrne, who will go through all of the essential points around vulnerability in customers, and our compliance administrator, Ern Casino, who not only has significant knowledge on this topic, but has also dealt with vulnerable customers and completes all of our compliance calls at Heartland. Just a couple of housekeeping rules. We've dedicated some time for questions at the end. So if we could kindly request that all questions are submitted via writing through the Q&A option in the bottom right hand, be much appreciated. And then we can address them as a group at the end of the webinar. Over to you, Em.
Thanks so much, Artie. Hi guys, welcome. My name's Emma. I'm the BDM here at Heartland. Today we're going through our vulnerable customer protection training. I think that this is an extremely important topic to keep front of mind, especially in the given environment where a lot of customers may be a bit more susceptible to being vulnerable than others. So what we'll be going through today is all things vulnerable customers, who they are, how to identify them, and also what to do if a vulnerability is identified. As Artie mentioned, we'll have a Q&A at the end. This whole presentation will also be available after the webinar as well. So Heartland's approach to vulnerable customers, we understand and acknowledge that defining any one vulnerability is actually an extremely complex challenge and very personal to customers when presented. So we understand that any one person could become vulnerable at any time and is likely to have already experienced periods of vulnerability at some point in their lives. So vulnerabilities, they can be permanent, they can be temporary, or they can be sporadic, and they can occur at any time. So keeping all of this in mind, Heartland's committed to responsible lending. We have a duty of care and will always ensure that the loan and its purpose is of benefit and is suitable to the customer. This includes debt repayment, gifting, and asset purchases. So this all kind of forms our duty of care and ensuring that we're doing the right thing by our customers. So a vulnerable customer, although they are quite hard to define, can generally be broken down into 4 different types. So we have accessibility, comprehension, circumstance, or age. So accessibility vulnerabilities relate to any kind of barrier that prevents a person from interacting with Heartland in a straightforward manner and or prevents them from acquiring information. So there are multiple different types of this vulnerability, but for example, language or location. So if you have a customer that, for example, doesn't speak English or English is their second language, this can increase their vulnerability in that they may not be getting the information in a straightforward manner. As a broker, it's important to acknowledge this and understand that if they are, requiring assistance from an interpreter or from a family friend or a loved one, that information that you're providing them is getting across in the right way and that they're understanding it fully. Location is a great example of an accessibility barrier. Some customers may be living in a remote location, especially in the given environment. We're unable to see our customers face to face. Sometimes they don't have access to video conferencing as well, so they may only have access to either a computer, post, or phone. And it's really important to make sure that first and foremost, the person that you're speaking to is the customer and that they're getting that information in a satisfactory manner. Comprehension, so this is fairly self-explanatory, but this is essentially problems with understanding information, and that can be due to things like disability, and this is both physical or mental, age or language, again, that can all create issues with understanding that information. Circumstance, so some customers may be in a circumstance that predisposes them to a poorer outcome, or there's an inference of vulnerability. So for example, you may be helping customers that are financially illiterate, education or lower socioeconomic status could be factors as well. So it's just understanding that if you do have a customer that is dealing with a circumstance like this, that you're explaining that information in a way that they understand and that they're getting that information fully and completely. Finally, I wanted to touch on age now. Obviously, all reverse mortgage customers are over the age of 60. That doesn't necessarily mean that they are all vulnerable. It's generally when their age is combined with other factors. So in those cases, we may take some extra steps to ensure that we're comfortable with their competency. If we've got any brokers on the line that do write reverse mortgages with us and have in the past, you'll notice that we do take particular care in ensuring that the customer understands the loan, understands things like compounding interest, and has also considered their future needs and objectives. So identifying the signs of vulnerability, there are different ways to identify different signs, and it's important to be able to pick up these when you are going through your interviews with the customer. So physical is a bit more easy to identify, I guess, in that, you know, they could have a hearing or sight impediment. They could be experiencing limited mobility. Intellectual, this relates to brain injury, mental health, dementia, or financial illiteracy. Obviously, there's more than that, but especially with reverse mortgage customers, things like, for example, you know, if you've got a customer that's continually asking the same sort of question, or they are forgetting, or they're experiencing some confusion, that might be a sign that they are experiencing an intellectual vulnerability. Social vulnerability, this includes things like English as a second language, isolation, which again, that's very relevant at this point in time. A lot of our customers are experiencing some isolation. Recent bereavement, a lot of reverse mortgage customers do come to us once they've just experienced a loss of a loved one. And this could also be a spouse that may have taken over all of the financial side of things previously. So it could be a new realm for them. And also financing the expenses of family members as well. Addictions, this one is a little bit harder to detect. More often than not, customers that are struggling with an addiction are not going to kind of disclose it outright. There are some ways that you're able to identify an addiction. So they include, but obviously not limited to, gambling, alcohol, drugs, and shopping. And this can be either by the customer directly or through a family member. So a really great way that I would advise that you could kind of pick up on an addiction is going through and having a quick look at their statements. If they have reoccurring transactions, you know, to the TAC, going down to the bottle-o, and even things like zip pay and afterpay frequently and to large amounts, that's a good sign that there could be an addiction there. Finally, there is the financial vulnerability. This includes customers that maybe have been going through a recent divorce. They have a high level of debt, little income, which is very relevant for reverse mortgage customers who generally are only on the pension, and also a large number of dependents. So that could be, you know, children with disabilities, and also grandchildren that they're supporting as well. So once you've identified a vulnerability, it can be a little bit tricky to have that discussion with the customer. And that's for a few different reasons. As we discussed earlier, you know, it's a very personal situation. Some customers do feel that they may be a little bit embarrassed to discuss the situation. And we find that there is a bit of a reluctance to discuss overall, and that can be for a few different reasons. For example, they could have a fear of impact. So once kind of verbalizing that vulnerability, there's a fear of impact of what that could do to themselves and also to those that they care about, loved ones. They sometimes are reluctant to accept their vulnerability, especially in cases where there are addictions present. They may not want to accept that they have that vulnerability. When relating to things like financial or elder abuse, more often than not, the perpetrators are, you know, the clients or the victim's family members or close friends. And in those cases, a lot of the time, they don't want to discuss the vulnerability because they want to protect those perpetrators from any legal repercussions. Some customers fear that they won't be believed or that they don't have sufficient evidence to explain their vulnerability. And then, of course, customers may not actually realize their vulnerability at all. And again, this kind of relates to elder abuse and, you know, if they've got family members or friends that are taking advantage of them, they might not see that as a vulnerability. They might see that they're helping them out. And also things like scamming as well. More often than not, they're just unaware that they're being taken advantage of or that they have a vulnerability. So what to do if a vulnerability is identified? The most important thing to do is to make sure that customers' privacy is protected at all times. So making sure that you're not sharing any information with anyone other than the customer or the lender. And also, if there are other parties that need to be involved, make sure that you get the correct documentation. So making sure that you have an authority letter, power of attorney, administration or guardianship order is in place. Also on that, you know, if you do have to get any of those documents through, we want to make sure that those are completed correctly. So if you send them through to us, we are able to review them and vet them as well. Customer discussion, it's important to get as much information as you can on the situation at hand, especially if elder abuse or financial abuse is occurring. So make sure you listen to the customer and document any concerns raised and try and get as much information and detail as you can. Avoid judgment, criticism, or negative responses. I know sometimes it can be easy to put your own personal opinion into things, but I think in these cases, you know, where the customer might be already a bit uneasy or a bit vulnerable and embarrassed about discussing it, it's important to kind of take a seat back and listen first and foremost and avoid that judgment. Reach out to your Heartland team, so either myself or the broker team, brokers@seniorsfinance.com.au, to discuss any concerns raised. And then finally, refer your customers to support services available, and we'll go through those in a sec. All right, so escalation, I'll leave these points on the screen, but essentially once you've advised us of the concerns, we'll actually escalate that to management internally immediately. If financial abuse is suspected or concerned, we will take action, and there's just some of the steps that we can take. All right, so the support services available, it's important to, you know, refer customers onto these support services if necessary. So we have financial abuse, which is the National Elder Abuse phone line. Memory loss, so if your customer is experiencing memory loss, this can be provided to either the customer or, you know, a family member or friend, and that's Dementia Australia. They have some really, really great resources there. Hardship, if they're experiencing any financial difficulty, we do have the National Debt Helpline there, as well as the crisis support, which is Lifeline's 24-hour support line. Before we finish up, I wanted to go through a quick case study, and I'll also do a little scenario where you'll get a chance to answer a few questions on a poll. So this particular case, we had a customer who was aged 70 and he requested a loan for debt consolidation, some home repairs and a cash reserve component. So while we went through the assessment phase, we were able to see the credit history check showed quite a few different personal loans, credit cards, and he was also a guarantor for a son's mortgage. We found that the customer was quite eager to complete the settlement, and as it went along, it kind of increased in urgency, and he became quite desperate. He advised that he needed to go to hospital for urgent medical treatment for a pacemaker and dialysis 3 times a week, which wasn't really noted at the beginning of the application. As we kept kind of questioning the loan purpose, we were advised just very brief details on what the loan purpose was actually for, and he requested not to speak to anyone on the phone. He was actually asking to be emailed for any further inquiries. After further inquiry, we kind of got to the basis of the loan purpose, and it was actually to send money overseas to bail out 2 people who were being held against their will. So the customer believed that he was really their last hope of escaping their situation. He explained that he'd been helping these people for over 8 years now, and that the situation had become dire, and therefore he was requiring those funds quite urgently. He also explained that recently he had sent $20,000 over to them, and that he'd promised them not to tell anyone about it. So some of the signs of vulnerability that we're able to detect in this particular case study is financial and physical. So financially, the customer's credit history check showed quite a few multiple loan and credit card inquiries. And he'd also advised that he was already sent $20,000 overseas. So I guess from our funding point of view, we don't want to provide this customer with additional funds that he's just going to use to send overseas again. Physically, the customer did disclose some health problems and immediate ongoing medical needs. However, it was important to note that none of these funds were being used for this purpose, and it was a red flag in that sense. Reluctance to discuss. This particular case study was a really great example of a customer that was displaying reluctance to discuss. So we did ask him quite a few times to provide explanation on what the loan was for. And he also admitted that he'd promised not to tell anyone, which shows that he might have wanted to protect his perpetrator. Due to this circumstance, the customer really truly believed that he was helping these two people in need, which shows that he's likely to be unaware of his vulnerability, sorry. In this particular case, we identified him as a vulnerable customer. We acted with sensitivity, respect, and compassion, and we escalated the matter immediately. After review, we were willing to provide the customer with debt consolidation for his mortgage only, and also funds for minor home repairs. Importantly, we weren't going to pay this to him, directly. We would pay this directly to the providers. We also advised that we would not be able to assist with a cash reserve component. So that's just an example of how we might be able to still assist a customer, but not assist them, to potentially be taken advantage of. We sat down with the customer to explain that, that this situation that he described was maybe not in his best interests, and kind of went over those concerns with him. From there, he decided to withdraw his loan application, and a while along, he actually did try to reapply with another broker, and we were able to discuss that situation and withdraw that file after that. All right, I'll give you guys a quick break from listening to me rambling on. I've got a scenario here, so please take some time to have a read. There'll be 2 poll questions about this particular scenario and whether or not it's a vulnerable customer. All right, that poll should be on the screen there for you to. Just give a few more moments. All right. Just share this out. All right, so that's really great. Majority of the attendees did answer yes, this is a customer showing signs of vulnerability. So I've selected yes. The signs of vulnerability are 91%, financial addiction and reluctance to discuss, which is correct. We did have some for social, intellectual and financial. In this case, we weren't really seeing evidence of social or intellectual vulnerabilities. It may be that he was experiencing it, but in this particular scenario and the information that was provided, we weren't able to detect that as a sign. Okay. Beautiful. So in that particular scenario, so the financial aspect was the customer was already in debt and was requesting additional funds to consolidate that debt. Potential addiction, so the customer was displaying some signs of a gambling addiction through the statements, and also reluctance to discuss in that he didn't want to provide bank statements when we had asked for them. So for this scenario, we discussed the RSL visits with the customer and kind of noted the number of transactions may have indicated gambling. And we actually did advise the customer that in this particular case, we weren't able to lend due to the gambling transactions, and we forwarded him on to the support group to help him reduce this habit. All right, thank you guys so much. I'll just quickly open up the Q&A. I think we've got one question in here from Lester. So we've got, will Heartland have a template to assist brokers to place notes against in relation to vulnerabilities? This is a great question, Lester. Thank you for that. We don't currently have a template for this. We do have our broker disclosure form for the application. Obviously, as you're going through that application, if you do have any concerns, you can of course put them in there. I'll just get Ern or Artie to jump in if they've got anything else to add, or if there's something that this may be something that we can look into.
Thanks, Emma. Yeah, agree with you. We don't have a dedicated spot to take this information down, but aside to the broker disclosure, we also accept your notes that you take when you sit down with your client, and you know, if you have identified something, pop it in your notes, and you know, we perhaps maybe highlight it to us, and you know, we'll take it from there. Ern, did you have anything to add?
No, Artie, I think what you've said is about right with what we have at the moment. Thanks.
All right, no worries. I've got a question here from Brian. Do you use IDU? I'm actually unfamiliar with this particular platform. If it's in relation to identification, we do have an electronic identification onboarding system. Is that what you were asking, Brian? I'll let you put another comment in. Andrew Campbell, if someone says that a large portion of funds are for overseas travel, would in this environment consider this a red flag? So I think it just really depends on the case at hand. So I think if they are able to provide evidence of their overseas travel, if it's an absolutely large amount, we may request some additional information and evidence on what the actual funding is for. That's a really great question. Ern, in your experience, going through the compliance calls with customers, have you found something along the lines of this, and is this something that you would ask additional questions on?
Yes, generally the loan assessor would have or should have asked the questions at the very start, or in the case where there is a broker or a sales representative, they should ask those questions at the beginning.
Yeah.
And generally it comes to me, and I will follow it up as well if I don't notice anything in particular in the notes stating what that large amount is for. But yeah, it's something that should always be asked, whether there's large amounts for, whether it be for renovations and things like that. You just need to find out exactly what are the details so that we know exactly that money is going to what they're saying it's going to. So yeah, it is important to ask up front, and we do try and pick it up in the compliance report. Thanks.
Thanks for that, Ern. And got one other question from Brian there. So he's just asked, is there an alternative to face-to-face available? So for example, Zoom or FaceTime? For customers that are unable to meet face-to-face, absolutely, you're able to do a video conferencing. And this isn't just in COVID. Brokers that, you know, are potentially getting clients from other states, of course, you're able to do that interview via Zoom or FaceTime, and this also relates to the solicitor appointment at the moment as well, so that's only for COVID. They're able to do that via video conferencing. All right, I think that's all the questions I have in here. I'll just quickly check, sorry, one other question I might have. Bear with me for a second, sorry guys. Okay, can we discuss with children if they are not power of attorney from Breen? So it depends if the customer has provided approval for you to discuss it with the children via the application phase. So for example, if they're helping out with the application, you are able to include them in on the discussion, but I think that having the customer be part of that discussion is absolutely essential. So we need to make sure that everything that you're discussing with other parties, such as children, that needs to be in the same conversation with the customer. Does anyone else have any other questions that you would like to go through? All right. Sorry, I've got one other question from Andrew here. So in this scenario, would it be better to have smaller amount in the initial cash out and then reserve? So I'm assuming that this is relating to the scenario that we had. So sorry, bear with me for a sec. Ern or Artie, would you be able to jump in and help out with that question?
Yeah, I'd just like to add that, you know, like as we look to, I don't know, you know, we're all based in different parts of Australia, and some states are obviously a little bit further ahead than us in Victoria, who are, you know, towards the end of our lockdown. So it's not uncommon for customers wanting to prepare to undertake travel, say next year, and they're getting, you know, all their ducks in a row. So, you know, it's not in the sense that, you know, if we identify that they want a large amount for travel, that we would necessarily say no. So a great option, Andrew, is what you suggested, is get out what they need for immediate purposes now, and then have that cash reserve, which is available to them to access, you know, when travel lifts up, and you know, they're able to do so.
Yeah, beautifully put. Thank you. And also, Brian, hard copy only, e-signature or wet signature for signing of the documents. So we do have, in relation to our application form, we do have the broker portal, which is more of an email sent out to the customer that they can confirm. If you're relating to the loan documents at the moment during COVID, we do have options available for some documents to be signed via, you know, DocuSign. Obviously, some documents, such as a mortgage document, for example, does still need to be wet signature. So we'll kind of explain that to the customer at that point in time. All right, I'll just double check any other questions. Okay, so a question here from Sam. We have genuine customers wanting to help their children consolidate credit card debt. Can this be deemed a flag, as clients don't speak English very well? They are totally aware of the kids' credit card debt being consolidated. Okay, so I think in this case, so this would relate to, I guess, an accessibility barrier in terms of, you know, language. So I think that, of course, you're able to have family members or family friends assist the applicant in completing the application. I think if the interpreter is actually receiving some benefit, we would like to steer clear of that. We would prefer someone to be, you know, helping them out that's not actually party to the loan. So I think in this case, if the children were receiving some benefit, for example, their credit card debt being consolidated, that we would prefer them to have an interpreter that had no benefit to the loan. It just kind of reduces that, you know, potential for elder or financial abuse. Some really great questions, guys. Thanks so much. I'll just leave it a few more moments in case anyone else has got any other questions to type in. All right, I think that's everything. Artie, do you have anything else that you'd like to add before we close it off?
No, except thank you for the webinar, and I hope everyone got a lot out of it. We will be hosting monthly webinars on different topics, so stay tuned for you know, advice from us on what next month's topic will be.
Beautiful. Thanks, Artie. And I will be sending out an email with your CPD points where you can allocate those. And this will also be available if you do have any other questions that you weren't able to cover. Please contact myself or the broker team and we'll be able to help you further. But thank you so much for joining in. And that's everything. So I hope you have a lovely Tuesday.
Thanks, Emma.
All right. Bye, guys.
Thanks, Emma.